Hello guys, glad to have you on board again today. I'm finally back from that vacation week I just had and was great. I have a lot of things to talk about today, so let's just get this started with the cryptocurrency sector first and the Bitcoin, the one you guys wanted to have a look at. As expected, the market moved up right when I expected it to do it. So I just bought before getting into vacation, and during that week the market decided to go up and validated the scenarios. So just as you know, we've been making separate videos lately to cover up the Bitcoin overall scenario when we got in back there. It was back there when we just worked out the speculative area, the reinforcements I just took back then, and of course we had the confirmation when I was on vacation, so I wasn't able to make a video out of this, but the next one should come pretty soon as we're already reaching out the potential taking profit areas, just to take partial profits to set things straight. But as I decided to cover up that entire trade with you guys into separate video just about that trade, then of course we'll have to make a new one pretty soon when I'll get to trigger the taking profit. So that being said, anyway, I obviously have already said enough about what I expect for that week. I think that the targets are right now in place, and the market will just try to chase those and then probably retrace and work things out for the rest of the week. So probably not an interesting week ahead, more likely going to be a rangy kind of trade action to be taking place after we've finished finding the taking profit area. So we're going to try to highlight what the potentials areas will be, where we can eventually find support afterwards, what are the odds for that trend to keep on going for one more bullish impulse, what are the odds for a bearish reversal. We're going to cover this up right now. So first, as we do as always, we're going to try having a look at what the weekly chart is looking like, as we have a new week that has been terminated on Sunday, and it was quite a week. I mean, we've opened that low and didn't manage to close at the highs, but we closed at the higher boundaries of that candle, and we've made a pretty nice bullish upward move on the previous week. So now what we can see is that the market has already broken up that previous week's candle right on Monday, which we've already broken that up. So the uptrend is still probably ongoing, yet is there still a lot of potential? I don't really think it that way, and this is what we're going to cover up today. So in a weekly perspective, we're still in a bullish oscillation, but just to be straight here, I mean, sine wave was totally unable to figure out anything cyclical in this. So I would see and say that we're nearly into rangy kind of cycles, but we do have a potentially bullish momentum, which leads me to believe that with this movement could still keep on going for a few weeks, even though we're nearly reaching the zero value in terms of momentum in the weekly chart. So we need to have a look at potential bearish signals. It's not just blue sky ahead. I mean, at the zero value on momentum, you're just neutral. It means that we have a bullish divergence, potential bullish divergence, but the fact is that until we manage to have positive momentum above zero, means that we're still below zero, which means the pressure are still to the downside. So we have something positive and something negative in the same time in the weekly chart perspective in terms of momentum. So I wouldn't necessarily take that big of an outcome in here, just saying that the weekly chart is mixed. So don't be too bullish, don't be bearish either. It's just that right here, right now, we're kind of in the middle of things, and we have mixed signals as well. So suggesting that we might range in here or go higher or eventually retrace, I mean, everything might be possible in terms of weekly charts. Now, if we get to the daily chart to kind of zoom in a bit and trying to find additional information in there, what we have in here is not that big of a bullish, not to say that it might eventually even be bearish. So we're going to cover up positive information and negative information, because just to be really clear here, we have a lot of mixed signal, not just in the weekly chart, also in the daily chart in here as well. So what we have in here is, after that bullish breakout, the cycles remains bearish. I mean, sine wave is not detecting anything close to a breakout. It's having cyclical oscillations, and from what we can see, we are nearly we've just done that actually that morning. We've went up here right to the sine wave daily target. It detected the bearish reactivation in here. The market broke that up and went straight to the target in just a few days. But now the oscillation in terms of momentum is going downward. We have a bearish OK signal. We're still working out the price we've been overbuying. I mean, right here we triggered an overbought pattern. And so far, the market is trying to get higher than that, but we'll see how today's candle close will look like. If it's like that, then it's pretty much bullish. We've been closing higher than the overbought pattern, which is a good sign. Option number 2, make another upper shadow candle today, and that wouldn't necessarily be the big of a deal, but that will be a negative sign. Means that when the market is overbought, the sellers are jumping in. I mean, at least buyers are triggering profit taking, which might need for us to extend the ranging price action in here before eventually consider heading towards the next resistances. Okay, so it requires patience in here at least. I would say caution is more likely to be what I expect for that week. So as a bullish, I'm looking for signals that might suggest other bulls are taking profits, at least partial profits, and I'll trigger those as well. And we'll see that in the 2-hour chart time frame. We're already having those signals. So in terms of a daily chart, what we have in terms of negative perspectives, the fact that we have bearish patterns on momentum, and that we're also reaching a bearish sine wave oscillations target, which is normally a double bearish signal. It just requires to have a price confirmation to be a clean bearish reversal signal in respect of the strategy. So for now, it's a potential bearish signal, but what is there is still a bullish opportunity in here is the fact that the momentum is straight at the maximum for a few days, which means that right now it's really dangerous to get into aggressive selling. So I wouldn't recommend for those who are only looking to sell to do it right now. I'm most likely saying that waiting would be the most rational choice right now, but selling the bullish entries you would have made earlier wouldn't necessarily be the best of a choice. I mean, taking partial profits sounds more reliable to me, and this is the conclusion that we'll get into the 2-hour chart time frame. Because whenever you get there, as you've been seeing, weekly chart totally mixed. We cannot necessarily put out any information, reliable trading information out of this. The daily chart says, okay, warnings, we might have red signals, but the momentum is still crazy high bullish, which means that if you want to take that trade, you need to have at least a 2-hour chart confirmation, and moreover, you need to have a clean bearish engulfing pattern on the daily chart. So if we fail in here, could be bearish. At least the bearish risks will increase. If we keep on going that way with the bullish momentum, then good for us. I mean, there's no more bearish demand, which means we'll go searching for higher prices. So 2-hour chart time frame is key element in here to figure out what the odds are, and I'm going to tell you what I'm about to do. So right now, from what you can see, we're working out the 161% extension of the first bullish impulse we had back then. So it's this plotted down there, which gives us 161% extension here, which is the price we're currently trading. And from what you can see, the market is not necessarily giving bearish signals in here. We've got a bullish breakout, we've got a sine wave target in here, and we'll still have a bullish momentum. So I wouldn't necessarily be confused. To me, the 2-hour chart time frame remains bullish. And I think we're going to go slightly higher, finding out my taking profit in here. So I'll trigger a taking profit there. It's a 50% taking profit, so I'll keep on some bullish leverage, but I'm just going to reduce the risks accordingly. As you can see, the daily chart is giving mixed signals as well. The 2-hour chart time frame is more bullish in a short-term perspective, but we're really triggered the taking profit pattern. So not taking a partial profit in here would be a mistake. And I think that we can nearly trading just as we've done before, trading the bullish breakout, finding the target, finding the bears. I mean, finding not the bears, but finding the bullish guys taking profits, just like I will. And onside got there, I think 50% of the table is a rational choice, just to reward the risks we've been taking down there and take a nice gain and waiting for the price to consolidate. And whenever it will be done, I think it will be time to eventually get back in or just let go with the latest remaining 50% on that trade to get to higher pricings, taking another layer of profits and then just get out, or eventually considering making bearish entries at that point. So the second option is that we manage for some reasons to install another bullish movement. I mean, if that bullish breakout keeps on going through the target, which is possible, we can reach out to what I call target number 2, which is near 200% extension. We've got a resistance level in here, which is 8,200. And if we go there, I'm ready to take a profit there as well. So another probably a 25% layer of profits. And anyhow, if we get there to $8,340, I'll take everything off the market. For simple reasons, we will be into 61.8% retracement out of the daily bearish impulse, which means if we go there, we retrace 61% of the bearish impulse. Doesn't mean the market will go slightly higher. It can very well do it. It's just that in here, as we still have pretty high risk of a bearish trend still being ongoing into the weekly and daily charts, I don't want to be a buyer out of this. It means in here I'm taking a nice gain buying the lows, and if the market keeps on going high, then I'll be ready to buy again on some pullbacks. But if the market had to reverse down here, I don't want to see all my gains just getting into vapor. So right now, patience is required. I think bulls might be looking forward for taking profits, and this is what the signals are suggesting in front of us in the 2-hour chart time frame. So it's basically waiting to see if we are failing at the Fibonacci level or if we are reaching the expected target, where all the technicals are suggesting we might go, where we have that resistance, tiny resistance, which is 7,000, slightly below 900. Okay, consider this as a price area. Any bearish reversal in here would be taken as a validation to me. But right now we're still having the bullish momentum, so I still forecast for us to go up here anytime soon. Can take a few hours, can take a few days. I don't really care. It's just as long as we hold on the supports, I'm not necessarily concerned about the price action. But what is a lot more dangerous in here is the fact that the altcoins are not following that move, or at least not all the altcoins, especially not the ones I've been buying, because I've been taking Ethereum as well as IOTA, and those two are not really performing well lately. If you have a look at the daily chart, I mean, this is nothing close to what we've had on the Bitcoin. We didn't even had to break up a resistance, and we're already back to support areas. So I'd say it's hard to say how the market will react. There's nothing close to this. It's just that assessing the odds, all I have in front of me is not really good. I mean, Bitcoin is nearly reaching taking profit areas where the where the Ethereum and IOTA are still back to support, and let's say they might be ready to break them down. So for some reasons, we could have some Bitcoin pullbacks because of altcoins. And if you have a look at the altcoin index, which is right here, you can see we have slightly more bullish things in here than we have in Ethereum and IOTA, which means the two I've been picking are not performing very well. They're underperforming the Bitcoin, but they're also underperforming the altcoin index itself. So might be a good choice buying Bitcoin lately, might not necessarily have been a good choice to buy Ethereum and IOTA as well. At least that's what the prices are telling me right now. So we'll see about that, if those two scenarios will need to be invalidated, even though the Bitcoin is reaching validation. That could be possible. That will be not what I expected, not something pretty much normal, as the entire crypto market is supposed to move its way together. Apparently it isn't, which means I might have made a mistake in here, and I might eventually have to take a partial loss out of this. So even if Ethereum and IOTA were to be invalidated, then I think anyway it will be a nice gain, as I had 50% in the Bitcoin, 25% in Ethereum, and 25% in IOTA in terms of portfolio spreading. So anyway, lots of reinforcements triggered on the Bitcoin, as I said back then, before heading into vacations. I told you I was buying in here with a conditional order, buying in here as well. Those two levels were indeed acceleration level, so I've done my job pretty well actually. So I've got reinforcements in here. I'm nothing close to heavy leverage on Bitcoin. It's never going to be the case. But these are the reinforcements I will be ready to take out there. So those reinforcements haven't been triggered on the Ethereum and IOTA for now, which means I still expect them to trigger at some point if the market was about to invalidate that bearish signal in here as well. In here it's a double bearish signal, so that's not a good sign. I really want to see the market breaking that up and nothing close to breaking the support, because if we're breaking the support, it's a double bearish valid signal, which will be bad, and I don't want to be a buyer of this. Okay, so this is something I'm watching pretty much closely right now. I don't want to see the market falling below its support on Ethereum, and the same thing goes for IOTA. Okay, so nothing good in there for those two. IOTA can break down a little bit lower. I wouldn't necessarily be the big of a deal. We have a big support down there, and we'll see about that. But IOTA could very well just do there and go there in a single day. That will be nearly a minus 20% drop. I mean, if we go there, yes, it's a minus 20% drop. So it would be pretty much bad for IOTA in a short-term perspective, but I think we can find some buyers down there. So I'm basically in a wait-and-see kind of approach right now. It's either the market is going to hold the current prices and perform pretty well in the next following days, or we're just going to fall apart with IOTA. And if that's the case, then I'm triggering stop losses to eventually buy 20% lower or not, and that's to forecast. So right now, really needs to be cautious regarding IOTA and Ethereum. Those two might be at risk in the next following days. All right, so now moving out of the cryptocurrency sector, trying to figure out once again what the hell is at play at Wall Street, what's in the golden boys' heads, how the hell can they buy so expensive stocks? And what leverages are they using to keep on those high pricings going to the upside? It's dangerous to me, still very dangerous kind of action to do this, to still keep on going higher and higher at no cost, at all costs, because we've been introducing some very dangerous prices distortions into many asset classes. We've been distorting the bond market, we've been distorting the forex market, we've been distorting the stock market itself. As you can see, the US stock market is the only one who hasn't nearly been close to correcting, where other indexes have been doing -10 to eventually -25%. On some Chinese indexes. So where the US, when in the same time US indexes has just been correcting for 3.5%, which is nearly close to nothing, and that's abnormal. So we've been creating too many distortions out there. We'll see how this has been playing. Last week, biggest event was the gold breaking down its support, but not necessarily finding some bears down here, which means we've been triggering the stop losses and just doing nothing right after it. So great danger. I think now that the stop losses have been chased down, might be out of gas for trading, regarding trading this. I mean, I don't see the market breaking this support either. So we'll see about that. Means that right here we've got strong support in here. We still have resistance by those who've been stop lost in here, and we'll see how this plays out. But I still think that for some reason something is going to go wrong, and that the US stock market is just going to fall apart and get all the money and just basically throw all that money into where the open doors are. We've got really, it's like it's so clear that if the money had to get out of stock market, it's probably going to be hundreds of billions out of this stock market. That has to go somewhere, and I think the gold is right here, just waiting for that money to come in. Just saying, for the same thing goes for the for Japanese yen. I mean, Japanese yen is pretty cheap, and anytime soon, if we get a bearish reversal in Wall Street, you know where the money is going to flow in. It's going to be yen, it's going to be gold, it's going to be the bond market. So we're going to talk about this one right away, because I think this is, as you know, the stock market is driving a lot of money. Gold isn't driving that much of the money in terms of comparing the two, but the bond market is treating a lot of money. It's the most liquid market on the earth, and you're never going to be able to manipulate the bond market. Too much money in there, and the entire economy is relating to this. So you cannot manipulate the bond market unless you're making QE. I mean, that's the only way you can manipulate bond pricings. And someday we're going to have to pay for those shits. I mean, we've been manipulating a market that is not supposed to be manipulated. So we've been manipulating credits, and at some point we just formed the biggest ever credit bubble. And we'll see how this plays out through time. But just to set things straight, I already know it's not going to be pretty. It's just a matter of time. And you don't want to be full short on the U.S. equities and buying the bonds, and selling the bonds just because we have a credit bubble. I mean, timing is important right now, and that's all I'm trying to figure out. Is Wall Street about to trigger the biggest ever bubble market we've ever seen, or are we already too far from standards and already about to pick up before eventually entering into bear market territory in the next following month? So it's really dangerous, and as I said, for beginners, like most of you guys are, it's not the best case scenario to get into actually learning to trade other asset classes, because right now, even for professionals, it's not really easy. Not to say it's probably the hardest market I've been trading lately. The market is acting really weird. We're having a lot of distortions, and I don't have a clue at how it's going to play out in the end, at least in a short-term time frame. I know I have clues about how it's going to end in the longer-term time frames, but once again, if you don't find the right and precise timing, shorting right now might be really dangerous, not to say catastrophic, for your equity. So anyway, right now what we have on the bond market, which I think is the most important one to try to figure out what's at play, is the thing that we have a double bearish signal already confirmed by a red triangle. But for now, the market is trying to invalidate that signal, and the worst is that we have a squeezing pattern, which means you cannot aggressively trade that area. You need to wait for a breakup or a breakdown to occur, and to follow that breakup or breakdown, which is the most dangerous situations, because the market I wanted to have signals out of is just not giving anything tradable right now. We have a double bearish signal, but the market doesn't want to follow it, and moreover, we've got that squeezing pattern. So all I can tell you now is that we have to wait in terms of equities and in terms of bond market. I really see two clear scenarios. It's either we're getting there, we're terminating a B correction, and we're heading towards C points to to search and seek for it, probably that 127% extension, which will be driving which will drive the bond prices near 2.55, which will be an interesting and very attractive buying entry prices. But right now, we don't know what the market is about to do, and could very well strike all the way up to retrace back to 3% and install pretty much. We could go to 3.70%. That I wouldn't necessarily be surprised. But if we go there, clearly we'll have a bubble. It's a certainty. If we go up here, it's that Wall Street has been triggering a crazy nasty bubble, and I don't want to see this happening, but I'm not the one who makes the market. I'm trying to follow the market. So this is what I'll prefer seeing, because it will narrow the risk taking and lower the pressure we've been putting into equity market. But if for some reasons the golden boys will just keep on going, taking more and more and more risk each and every day, then we can create a nasty bubble kind of trading. Not going to end well, you know it, but we might still keep on pushing for 6 additional months in a crazy vertical pricing into big capital, into big market caps. The giga caps, the Fanget, I mean the guys, everyone knows about those. Everyone is trying to figure out if we need to buy those because they're going to take an additional 30% upward move, or if they're just going to collapse right now. It's the actual question, and it's what everybody is trying to figure out. Is the Fangets, the giga market caps, about to surge for an additional 30% upward move that everyone is going to want to be into? I mean, that will be a speculative bubble. Every retail trader is going to buy Apple or shit like that at very expensive prices, and then we're going to have a market crash just like the cryptocurrencies have been doing. It's the exact same thing. I mean, if people are getting into buying stock market at that price, can only be done with a bubble. And from what I can see, I don't see retail traders ready to buy very expensive stock. So I see Wall Street selling me that scenario that Wall Street wants to have its bubble, but for some reason I don't see the euphoria into the retail traders. I don't see that much of newcomers and beginners wanting to jump into the market. So it makes me wonder: are we really about to have that bubble if no one's buying it? That's the weirdest thing right now. I mean, the golden boys want to sell it to you, that's for sure. Now, if you don't buy it, it's not going to work out. I think at that point, that's the risk. I mean, Wall Street cannot buy it just by itself. At some points, it's not possible. So anyway, what we have right now is a very stretched bond market that could trigger some kind of breakup or breakdown, hard to say, but something is about to happen in the next following days as we have a contracting momentum. We've got the opposite scenario in here with the German bond market that is surging higher, but for some reasons this one's normal. I mean, we've been pricing really too low on the German bonds for no reasons. We had nothing to do, we had no reasons to go there, as QE is about to end, and we have dangerous signals coming out of German economy that should stretch and strengthen the yields pretty fast. So I'm still in that trade. I think that one has been reaching out of a speculative area. So this trade is now confirmed, and I'm buying any kind of pullback that we might have in here. But I don't think that it is necessarily going to pull the stock market, the U.S. bond market to the upside. I mean, we're having too much price distortions lately, which means at some points it has to correct. And if for some reasons the stock market, the U.S. stock market, was about to fall apart for a nasty 10 to 15% downward move, I don't see that much potential in the Eurozone area, which means we'll have to find some leverage to make the Eurozone fall, but fall a lot less deeper than what the US could make. And I think the bond market will be the thing. We could have a bearish yield structure on the 10-year yields in the US economy, and we could have an upward move going into the same expiration, 10 years, on the German economy. So we could have rising yields on German economy and falling yields into 10 years treasury bonds. That wouldn't necessarily be the big of a deal. It's the same distortion that we had into equity pricings. We've had U.S. equity rising forever as the Eurozone economy has been falling and retracing lately. So at some point, this is a big distortion that has to somehow narrow. We've been spreading the money into different areas and concentrating into some specific areas for too long, and at some point it might be really dangerous to keep on going that way. So bond sector is under pressure, and I think that's the one you need to have your look at in the next following days. The forex market as well has been pretty much under pressure during the previous week. The gold has been breaking down its support, as I said. It's not forex, but it could be associated to it. Silver as well has been breaking down. I haven't triggered anything close to invalidation right now. Invalidation doesn't mean a stop loss to me. Invalidation just means, okay, they're trying to get my stop loss. Now, am I going to give them away or not? I haven't. Nothing close to it. I'm still buying the gold and buying silver. I haven't released the stop loss on those two scenarios. I think the market's just trying to get those stop losses, and I'm not going to give it. I'm not going to give him that easy. I mean, that's why I'm speculating with low leverage, to have some room to adjust the risk if necessary. I see the market wanting to chase the stop losses of those who've been trading with too much risks, who've been putting themselves into red areas. I wasn't, and clearly I don't want to give away the stop loss right now. So I've been putting them downward. I'm now waiting to see if we can manage to go really lower than that or not. Right now, we aren't, so everything's fine by now. We'll see how this plays out in the next following days. If that movement is keep on going to the downside, I'll of course trigger the stop losses, no questions asked. But as long as we hold on to the support, and we've got a tiny one in here that we're working at right now, it's basically we broke ground support, found another one. If this one is the one that works out, that will be the most stupid decision to take a stop loss in here. Okay, so I'm still in, and I think that market is going to wrong foot those who've been selling. If some people have actually sold in here, which I don't really think that's the case. I think nasty speculators have been selling in here to trigger stop losses, but once they've been triggering the stop losses, I see no reasons to keep on selling in here, more reasons to buy those very attractive prices. So we'll see about that. The other forex market that is really interesting to me right now is this one, the euro-yen. I think we're nearly reaching validation in here. It's pretty great. I've been selling right at the top, and that's a perfect trade right now, at least for now. And from what I can see, we might be able to find some support in here. That was the previous big resistance, and I think the market will have some volume to take care of right here, which means I think we could build a temporary support. As you can see, sine wave suggesting this as well. We're right on the bullish target. The momentum is nothing close to bullish right now, but we could work that price area, reactivate, and I think this is clearly a wave 1, and I expect the market to make a wave 2 back to resistances, and I'll get fully leveraged in here if we have anything close to a pullback there. Okay, so consider this as, to me, a big selling area. We might be able to put some retracement in here once the bottom is validated. Okay, you can put your Fibonacci retracement and target 61 to 76.4% area into getting into selling. I think this is where I want to get fully leveraged in that thing. I'm ready to get leverage 5 in here. I'm already leveraged 3, and I think I'll extend this to leverage 5 whenever we'll get to pull back there. Of course, the stop loss will be put it right at the previous market top. So for now, waiting for that thing to get in here, reaching out to the validation level. I want this to be broken down. It's already the case. So all I want right now is the market to stabilize in here, build a support area, pull back up there, getting into full leverage entry in here, and then I want to see that market just collapsing and falling apart. If we do have the euro yen falling in a straight line, you know what that means. It means the US equities are falling apart as well. So they've been messing with up for a long time. We've had that big retracement that was out of what I was expecting, but from what I can see right now, we've got all we need to just fall apart. Not just right now, but I think coming of a pullback, getting a lot of sellers, and then we'll have a market that is probably going to drop for 7 to 10% into the euro yen. So that will be the minimum we'll have on the US equities as well. GBP USD has been under pressure as well because of the dollar. It's been trying to break down its support as well. I haven't been triggering a stop loss in here either for the same reasons. I think the market has just been trying to fuck up and taking the stop losses, but I think right now we're about to wrong foot those who've been trying to sell those supports. I think they've just been trying to sell to buy at better prices. So I think right now buyers are the ones who are at play, and this is the reason why I've been keeping my trades open, not to say I've been reinforcing a bit on the GBP USD. At least for now, as long as we remain above those supports, I see no reasons to panic or getting anything close to those emotions. So right now I remain bullish in here, firmly bullish. I want to see a price confirmation. What we have right here is great. I mean, the bears have been trying a bearish breakout. They've been wrong-footed right in here very brutally by a nice bullish divergence. So we've got a bullish momentum, and I want to see the price heading toward resistances. The faster we do it, the less sellers we have and the more room we'll have to go to the upside. From what I can see, I think that this will be the bottom, and I think that the market is now about to retrace back to Fibonacci retracement levels. So first target will be right here at 23.6% retracement. I think target number 1, in which I'll secure the gains and take partial profits, will be near 38.2% retracement, which is 1.35, or the price area nearby. This is where I'll be ready to take some partial profits. Right now it's just wait and see. On the GBP USD, we also have the AUDNZD, which is totally separate scenario. I mean, AUDNZD is something that I trade totally out of the equity scenarios or whatever. It's just an independent scenario in here. It's doing pretty well right now. We're just trying to figure out if we can break down that support or not. Trying to figure out if we are building some kind of triangle structure, which is highly probable to me. We can build this, and in that case, we'll find support in here, and then we'll probably have to break up the resistance anytime we'll get there. Okay, so normally it's wave A, B, C. We'll be about to make DE, and that's what we could head toward too. So right now it's pretty much impossible to know what's about to come. Of course, if the market is breaking down those supports and not finding anything, any bullish support down here, we could go lower eventually to those supports area, in which we could have some interesting buying interest signals to pay for. But right now it's just basically a wait and see kind of approach into AUDNZD. Either we find some bulls, and if we get back to the resistance and break it up, I'm ready to put some more leverage to head towards the next support, next resistances area, which is right here, where I'll start taking some gains out of the long-term buyings I've been making down here. Okay, so first taking profits are about to come there, but I think the market will go higher than that to eventually figure out the target number 2. So that's to come. The dollar index, I think, has been giving a very consolidating signal in here, which means that I think for now the dollar thing is uninteresting for the next following month. Let's say a couple months, or eventually consider this a quarter. I think during the next quarter, the Q3, nothing is going to be close to tradable regarding the dollar. I think the dollar is just going to mess up with all those who've been trying to sell this or buy this. It's just consider this as a dumb area trading in here, and trying to find selling entries as high as possible. But I don't necessarily suggest that you should buy that low. It's already been tested. I think this is more likely what's at play right now. So really, to me, is waiting to have the blue area in here. So letting it go, don't play the dollar for a while. Just let it play up, down, up, down, up, down. Just pick one. As I said, I've been playing EURJPY, but you can take USD if you feel like it's the one you want to play. But I think euro dollar is going to be a big mess in the next following days and weeks and months. So just pick one, and I think either the euro or the dollar is going to be the same case scenario. All I care about right now is the GXY, the Japanese yen. And I think what you have in front of you is something that you absolutely want to buy. You've got a perfect bullish entry right at support on a bullish asset. So to me, buying yen is definitely the big scenario that is about to come. We've got the taking profit pattern confirmed by the momentum right at the support. We also already have the bullish confirmation, price confirmation in a daily chart. So this is clearly, to me, the biggest scenario that is about to come. And from what I can see, this is what we're heading to. Wave 1, 2, and then we'll have a pretty nasty wave 3 to 4 and 5, and the target is right here, which is more than 10% higher. So this is not suggesting anything like the US stock market is going to create a bubble. It's more likely forecasting the fact that the US stock market is going to fall apart and just drop 10 to 20%. So I still think that this is what's about to come. I have multiple pre-signals suggesting that this is what the market is supposed to do, but we'll still have that damn problem, which is the quarter earnings. I mean, the market is just focusing on this and this only, even though all the other signals are red. It's like Wall Street doesn't want to care about that. It's the most dangerous behavior we could have, but that's what Wall Street's playing right now, and you don't fight that. So just think straight. What I think is not necessarily what the market will pick and choose. So be rational if you're following me there. I'm not putting anything close to leverage trading in here, and neither should you. If you're risking your capital in here just by assessing the fact that the US equities should drop, if they don't, you're going to be broken. I won't. So don't blame me for it. I'm a trader. I'm a very highly level of speculative scenario trader. So don't follow me with leverage. That will be the worst choice you could make out there. So play it rational. If you want to follow me there, okay, you can do it. But be ready that even I doesn't have that much confidence in here. I think that this is what is going to happen, but I've been proven wrong for the latest couple months with those volatility sellings and things like that, and we're obviously going to talk about the volatility right now. So I think this is where the big game is at play right now. As you can see, in terms of cycles, we're right into the next potential upward cycle, and the question is, to me, either we're going to stop there at 21 and going to have another bearish volatility cycle that will make wave 1, 3, and 5, which means we'll have to go lower, eventually reaching out to the 10 area again. So that will be bubble kind of trading scenario. But I think anyway, in a bubble trading kind of scenario, we'll have to reach out to 21 first anyway. So 21 means that the volatility is going to break a daily resistance, I mean at least temporary, and if things are still under control, I think the volatility might be dropping afterwards. If things are getting out of control, I think we could get right up to 31, straight line, and 31 is not going to be pretty for those who are equity exposed. So if you have equity into your portfolio, especially the ones that are at risks, all the giga caps, if you have those, be aware that in a single day you can lose 15% of your capital just like that. Okay, just in a clap. It's just because that's how it is. I mean, everybody has been buying the whole package through ETFs and shitty investments like that. if things go dirty, they will all want to flush that out instantly, and everyone's going to sell the same stocks without anyone to buy them. And that is not going to be pretty if that is what's going to happen. So be aware of the risks. There are also high risks of those valuations to just go crazy higher and create a 30% higher pricing bubble into that sector. But I don't see that coming, because all the pre-signals are showing that investors are not putting the money into those assets, but most likely buying yen, buying some VIX, buying some gold. So we'll see about that. It's binary choice, actually. We've got lots of room to make some pretty nice gains into gold, into VIX, into yen. So it's a binary choice. Investors will have that choice. Either we get into safer areas, we buy the VIX, we buy the gold, buy the silver, sell the US oil, buying the Japanese yen, and selling some dollar for a short-term perspective. Option number 2, we get into keep on going. We're going to buy the dollar forever. The yields are going to surge higher, and we're going to have pretty nasty valuations on the Fangit. But this is not going to end well. It means we'll go parabolic on those assets, and everything that goes parabolic always ends bad. That's how it is. I mean, it's happening in life. It's happening into anything in the universe. Anything that is parabolic is always ending very badly and brutally. So if we have a bubble, we'll have a crash. I mean, that's how it is. If we are bubbling all those assets that are already into bubble trading, then we're going to create probably what is going to be the trigger to burst that bubble afterwards. So VIX is a big guy you need to have a close look at during the next few days, weeks. I see those two very big clusters, 21 and the area nearby. Don't take it for a straight level. It's just an area. So anything close to 21 is an interesting area. And if that area is just busted away, that means that we're probably heading toward the 31 area, in which nastier things are at play regarding equity pricings. Let me have a look. We got the junk bones, interesting scenarios in there as well. As you can see, we've been trying to break down, been failing. So okay, we've been invalidating the bearish breakdown, but doesn't that necessarily means that the market is bullish. It's just that in order to be bullish, we'll have to break up resistances, which we haven't been close to lately. Even worse than that, we're just retracing back to trend lines and working them out. So if we, for some reasons, we find some bears in there, oh gosh, it's not going to be pretty as well. We've got a lot of room regarding the junk bones to just go there, falling apart, and we're probably going to make a lower low than the 2016, sorry. So first support is in here, and as you can see, regarding the junk bones, it's a 4% drop, and we're talking about yields in here, okay? We're talking about bond market. We're not talking about stock market. So minus 5% in there wouldn't necessarily mean a bigger drop in the US equities. So I think the minimum is to go right here, and I strongly think that we'll go even lower than that to find that support who hasn't been tested yet again, and that's a bigger drop, bigger than it's an even bigger drop, and we could eventually even go lower than that, far lower than that, to break down that low and go there. And if we go there, then believe me, you really don't want to go there. This is the equivalent of the VIX at 31 and above. I mean, this is probably the equivalent of the VIX at 21, or this one. I think this is VIX at 21 in that area. This is VIX at 31. So this is consolidation, not yet the end of the world kind of scenario. This is, oh shit, we're dropping 10 to 15%. We're just dropping 10 to 12%. We're dropping 15 to 20% on the US equities, and just basically the Fangits are falling apart. Let me see if I've been missing something here. So yes, as you can see, the Fangit index It's just crazy fucking parabolic. I mean, if anybody is trying to tell me this is not a bubble, then you're obviously wrong. And it's just once again, as I was saying this back then on the cryptocurrency sector, everyone was there just, okay, Phil, don't be too aggressive. Don't try to sell a bubble. Just wait for it to burst first, and then you get back into pullbacks. That's not how I do trade. I mean, all I have in front of me is just something about to burst, and I want to make damn profit out of it. So I think that the faggots in here are just topping up, and whenever they will get back to support area, it's not going to be pretty. And to me, the next support is there, which leaves us to at least drop 20%, and I forecast us to go even lower than that. I think we'll go there, which means minus 35% just on the faggots. But they are the ones who are making the gains lately on all the US indexes, so if they are falling 33%, believe me, the indices are going to go worse. At least they are going to drop 15%. And the Nasdaq is probably going to fall apart. Just to set things straight, the Nasdaq is going to drop minus 20%. Oops, sorry about that. So yes, be aware that this is high risk. Even if this wasn't to be the market top, I mean, yes, the risk is to go crazy high in a straight line. That's yet to be possible. But from what I can see, it's not going to happen. We already had the volume pickup in here, and generally that means that the end is near, and as you can see, volume is already starting to pick up as well in here, and the next time you'll see the volume picking up is with the time we'll get back to support areas. So from what I can see and what I've been trading lately, to me, high probability to see this falling apart pretty much sooner than later. So this is the only reason why you don't want to be a buyer of those assets. Even if it's choosing to go to the upside, just let it go. Don't go into any kind of FOMO trading. It will be the worst choice to make ever. It will be just like buying the Bitcoin at 18,000. Those who've been buying those prices, I hope that they have been taking their profits at 20,000, but no one has been doing anything close to this. Those who've been buying 18,000 just got huge losses afterwards when the market collapsed it. And we're going to have the exact same thing on the stock market. So if you see the market buying, just don't buy. Don't sell either, okay? Don't try to sell if the market is going higher, but just let it go. I mean, just watch out for it and wait for the crash to come. When the crash will come, this is what you want to trade, not the crazy, stupid, speculative bubble. I mean, most of you guys have already been making that mistake with the cryptocurrency market. Just don't repeat that same stupid choice in the stock market, as even though it might sound really attractive and everyone is going to tell you, what, you haven't bought Netflix, or you haven't bought Nvidia or whatever, you're stupid, you should do it, it's easy money. Then just be smart that time and be on the opposite side of the mirror. Just tell them, okay, look at what you're doing, it's not going to end well, and I don't want to be part of it. I just wait to get the smart money, which is selling the bubble crashing. This is what the smart money will do. Dumb money is buying, smart money is selling right now. So just act accordingly. Trade with the smart guys. Even if the smart guys just let the money go to the upside, just do accordingly. Let the money go crazy high, and then when the time it comes to see that collapsing, just get in there. This is where the low risk trade is, waiting for this to collapse, not just buying without targets. Okay, you just don't do that. Wait or sell, and sell with speculative leverage, because if it has to go higher, you don't want to remain in there, and you don't want to lose 10% of your money. Just lose 3 to 4%. This is what I've been doing right now. I mean, if the market is choosing to surge higher, I'm going to lose 3 to 4%. That's all I'm going to risk. If the market is collapsing, I'm going to take a 30% win. So it's a 1 to 10 ratio, and this is something I want to trade. And I'm ready to take a wrong foot 1 or 2 times. I mean, I'm ready to give away a stop loss in here, but believe me, the next time will be probably the good one. And I'll take the money in the end, no matter what. It's just a matter of time, and all I need is to have the patterns completed. And from what I can see right now, the pattern might be about to complete in here, and if it isn't, we'll have a pretty crazy upward move, the one I don't want to remain a seller of, but ready to be selling again the next time we'll make a top. Alright, hope things have been clear in here. I'm not going to enter the details in here. I mean, we're already weak into most of those assets, and we'll see how this plays out. It's really a binary situation in here. Either we're already too late and things are about to collapse, or we're about to see some crazy, probably not a 30, I think a 15% move is decent. In here, so that will drive that sector into a crazy high vertical move to be coming. Just exactly as we've done with the Bitcoin. I mean, basically, if you're trying to figure out some kind of thing, I think we've been doing this. Okay, this is the time the volume is picking up. Volume has been picking up in here, so it's either we're here and what we're trading right now is just there and things are about to collapse already. Option number 2, we've just done this and we're about to see this, and believe me, you don't want to be a seller. For those who've been reminding me lately, just set things straight. I've been selling Bitcoin back then in here. I've been taking a stop loss in pretty short notice. I've been selling in here, I've been stopped out in 2 days, and then I just said one thing, okay, you took my stop loss, I'm just going to let that thing go, but believe me, the next time I'm going to take that short, it's going to work out. I've just been missing this one, and back then I've been really clear, I had the signals, I should have taken this, but I wasn't in front of the computer back then because of vacations again, but I've been taking that trade eyes closed, and believe me, this one paid a lot more than the ones who've been paying in here and buying this. Because most of those guys have been stopped out in the end, been using crazy high leverage because they've been buying here. So they got an average price in here, they got stopped out in here. So believe me, I've made a lot more money than the ones who've been buying in here back then. So just do and trade smart accordingly. That's what I'm trying to teach you guys here, to forget about dumb trading and getting into actual risk management and real trading. So don't buy the stocks right now. That will, I mean, just the Wall Street guys are trying to sell that to you. So if you are buying what they're trying to sell you, means that they're probably trying to sell anyway in the end. So that's it for today. I'm going to take the questions right now, and we're going to move on to trading the US session coming later today. So Netflix bubble has just popped. Nothing close to this right now. It's possible, but it's a structure I'm not necessarily confident with regarding Netflix. We generally don't do things like that. We generally don't do double top structures to trigger a crashing pattern, but so that could be the first of a kind. But I'm really not yet confident. I want to see the market just getting back there and falling below that price to consider this as a viable crash. And if that's the case, then we'll probably go there at least, not to say even lower. So we'll see about that. But Netflix, if the bubble is about to pop, and I think that's high probable, okay? But right now I think still a little bit too dangerous to forecast this. General Electric is not doing pretty. I'm disappointed by this one, but as you can see, it's not necessarily the big of a deal either. We've got this, and this is what I've been putting out lately in terms of analysis. We've had that big support. Sorry. So we're getting there. We still have that bullish gap in here, which has been partially filled here. But this is some kind of a breakout gap that is happening in here. As you can see, anytime we're trying to pull back in there, we'll have bullish support. And it's the market so far is unable to put out candle closes in there. And as long as that's the case, I think that not that much to be worried about, even though if the earnings release kind of disappointed the market and we just fall that 4% drop, I mean, could still be a positive outcome in the end, and will just be an ABC extended kind of correction in terms of cycles. And generally the pullbacks are not that long. They're not taking more time than the bullish impulses are doing, but right here it might be the case, just an extended kind of correction, failed to break the resistance in here, just retracing more and more time, accumulating more and more bullish guys in there. At any time we're going to break a resistance, I think that thing is going to be bullish for quite some month in there. So it's just, I think extended patience is required in here. I'm not necessarily invalidating the scenario anything close to this right now. Just think we've got an extended pullback that is going to get more bull guys in at play right now. So anyway, the stop loss in here just remains. I watch out closely the prices in here. If for some reasons we were about to break that down, eventually I'll take partial losses to get into buying at better prices and more leverage down here. But I don't really see that happening. I think we're going to build that double bottom structure. We've had that bullish gap in here, and that was a signal. It's not something that you're going to invalidate just like that. So we've been gapping up and keep on pushing and broken a resistance, and I think that at some point bulls have been getting in there, and I think, like me, they are not getting out right now, which means we're not going to have that much of sellers in that support, and I think at some point we're going to invalidate the breakout, and this will be a bullish signal. So we'll see about that. For now, the bullish signals are really, really rare. As you can see, we had one back then, worked out pretty well. We got this one, got broken down. We got this one broken down as well. I really want to see some bearish signals being invalidated at some point, and I think at that moment we'll be into a pretty nice wave 3, which is the one that is about to come if I'm right. So if I'm in the right side of that trade and of that scenario, I think that the next target is about to be pretty much nearly 30 to 40% higher in terms of pricings, and that will be a very nice reward out of waiting and buying into those prices. So we're going to terminate in here, taking the questions, finishing the questions. Okay, thank you. Valuations in the DAX is much higher than the S&P. Yes, it is, and the real it's the average PE, but if you take it adjusted to inflation, it's even higher than ever before. I mean, we're nearly picking up the 2000 bubble prices. It's really nonsense. It's just crazy, pure, stupid bullishness. But once again, you don't fight it. If the market decides to put an additional 15% just to take down the sellers like me, you don't want to hold the sales, just patiently waiting for the next market top to just double down on the sales. Just that's how it is. You don't hold the sales if you're trying to sell a bubble. That's rule number 1. You need to be aware of that. That means high speculative level, high speculation can never, ever, ever come with leverage. Otherwise, you're totally out of context. And if you get into taking the biggest loss of your life, just don't come cry after me afterwards. You've been making the mistake. Okay, I'm a speculative trader. I know what I'm doing. If you're trying to copy me and putting some leverage ahead of this, then you're just not copying me. You're just doing nonsense kind of trading. Yeah, and don't fucking ever tell me about the forward PE, which is the just biggest ever stupid mistake that the guys are doing in Wall Street. They're trying to magically sell you the thing that the prices are not that expensive. Yes, they are fucking expensive. And if you're ready to pay forward PE 2 years ahead when you know that a recession is coming, you're just stupid enough to buy those things. So just get in there. Buy the stupid pricings, do however you think, but just be straight in here. If you forget to take your profits, I'll take your loss. okay? So you do as you please. I'm not here to tell you what you should do or not do. All I can tell you is that buying right now anything close to the Nasdaq equity prices is just pure nonsense in terms of risk management. And if you do it, you can be lucky and do it well. You can be very unlucky and do it pretty nasty. And you don't want to be among those who will be taking heavy sales afterwards. The earnings dates for stock can be found in TradingView. Yes, it is, but into TradingView you don't have a search function. All you have is the list of those doing it, and that's a pretty long list. I don't want to get through all of it. Yes, oh yes, and if you're going to the company names, yes, yes, actually that's one way to do it. If you just go there, I think in the details they're giving it. Yes, no, they're not. Yes, more maybe. Yes, that's where it is. Margins, dividends, income states. Where the hell is that? I know that number is somewhere. Dividend yields. That should be there. It should give us the date. They're not. Okay, but somehow the information is somewhere. Maybe there. No, this is technicals, and we don't give a shit about that. That's for trend traders, and I'm nothing close to this. So anyway, keep on moving with the latest questions. So if you hover the box, I'll say that is estimate expected. Sorry. The earning is in a box by the name of the company. I'll say then 34. Ah, yes. Okay, I see the box you've been talking about. Yes, it's that box. So it's yes. Okay, thank you. I didn't knew about that. Okay, so that's pretty wicked thing. So this is how you do. You've got the earnings estimated, and it's publishing on October 22nd. So 3 months until the next, because we just got this one. Yes, indeed. So NVIDIA, for example. So thanks a lot for this. I mean, that's great. NVIDIA, I think, is a pretty nasty one, and it's 24 days of publishing. So it's going to be interesting to have this one. And Apple is 8 days from publishing, and I expect this to be not that great. We'll see about that. So anyway, just to sum up all the information we've just been talking about, highest possible level of speculation at the current pricings, at the current stretch and tension we have all surrounding the market. We really and clearly have two opposite scenario facings in here, and from what I can see, even how hard the golden boys are trying to sell you that bubble, I don't see that many retail traders getting in there, and this is required to have a bubble. In a bubble, it's not just pricings getting higher, it's pricing being bought by stupid traders, by unexperimented persons, unexperienced persons, and so far I don't see anything close to that. I mean, all I see right now is just professionals trying to sell versus crazy, stupid, risk-taking golden boys who keep on buying at short terms. So this is how it is. I mean, mid-term to long-term traders are selling right now, and just short-term, high speculative traders are just trying to buy right now to see how high we can go, and if we can trigger some kind of switch in which the market can enter into bubble territory. But from what I can see, it's not working that well. We've been trying fucking hard. I mean, we've been doing this the entire summer. Selling volatility, trying as hard as we can to trigger buy entries. All we've been seeing lately is just rangy market, and that's nothing close to something we want in order to trigger a bubble. So to me, odds to see the bubble has been dropping down to 25% out of 75% to see the market just falling from 10 to 20%. But for some reasons, the market isn't falling yet, which means there's still a 25% risk getting in there. So I'm gaining in terms of confidence day by day, but I still fucking wait for that price confirmation. And until I don't have it, as long as I don't have it, I'm not going to get into leverage trading. It's not going to happen, even though even how strong my confidence can be in that scenario. And many of you guys have been figuring this out. I've been talking about Wall Street more and more throughout the days because I'm gaining confidence into my scenario. But nothing is going to be leveraged until I get the price to confirm. No matter how confident I am, I'm still following the plans. I'm no stupid trader, I'm just following the strategy in here. Until you get to validation, you don't put any kind or any sort of reinforcement. All right, I feel like I had to set that warning once again, even though I know I'm repeating myself. I've been saying this so many times recently. It's still like some people are not figuring this out, and it really is important for you guys to get that. If you're trying to copy me doing this with leverage, you're going to end up broken. At least you're taking the risk to end up broken. I'm never ever going to do such thing. Okay, so don't come cry after me if you get broken. You will have done the mistakes. Just to set things straight. Okay, I've been clear with you and totally transparent since the first day I've been making those videos. I'm telling you what my portfolio is doing, where I've been putting my own money, where I've been spreading it throughout different assets. I'm ready, and I'm aware that I'm taking some risks in here, but if things are going absolutely wrong, I mean, if all my scenarios were to be invalidated in the next following weeks, which means I had to trigger stop losses on the gold, on the silver, I had to take down losses on the dollar scenarios, we're going to do GBP will be triggering stop losses. I mean, euro yen will surge. If this is what's about to come, I'll take probably a 5 to 10% loss on equity. That's all. I mean, that will be a big drawdown, but nothing close to a big deal. I mean, just 10% downward move on the equity, as I've been already doubling my capital since the start of that year. So I'm just giving away some gains I've been making previously. That's it. That's all of it. I mean, and if this thing is triggering, I'm going to make the biggest year ever. I mean, that will be my best year since I've been starting trading. Because for now, in terms of time ratio, that's the best year I've been making. It's just the only questions I have left right now is either I'm going to terminate that year the way it started with a fucking nice series of gains, or I'm going to take a series of losses and surrender some of the gains I've been making earlier that year. That's all I'm wondering right now. That's basically a question, and I don't know what the outcome will be. If the choice the market is making is taking some gains out of me, no problem. I'll give away those gains and I'll get back in when my time will come, and I'll take the gains later. It's just I don't know when, but all I know is that buying equities right now is not a rational choice to make. Goodbye guys, and we'll see how those scenarios are plotting throughout the next following days. I hope you understand that. I hope this time you got my point well. So it's not just getting into bear market trading right now, it's just finding the pre-signals that the trend is over and that the bear market is down the road, but not necessarily now, and nothing close to come in the next following weeks, I think. Anyway, bye guys, and see you tomorrow.